All right, welcome to the breakout project. I should say the breakout project. So this is our first webinar regarding basically newbies to trading. I came across one of our subscribers who I met at York Market on Friday, and she informed me that she knows nothing about this, and I should have thought about that. So today we're going to go over basically the most basic concepts of trading, and that is a candlestick. What you're looking at here on your screen is a candlestick. So let's first look at this, and then we're going to go to the charts so it will be explained a little bit better. So basically you're going to have either a red and or a green candlestick. In this example, it's black or white, but for the most part, you're going to have red or green. The difference is red basically closes, see this down here, lower than it opens. Red basically closes higher than it opens. So if you were to put these two candlesticks together, let's just use this example, right? So basically this would be the open price. This wick that you see here would be the highest price that the price action had got to within this candle. This would be the lowest price. This would be where that candle closed at. Now, you're going to have different time frames on your charts, right? You're going to either be using a 1 minute, 2 minute, 3 minute, 5 minute, 15 minute, 1 hour, 4 hour, daily. It doesn't matter. The same principle goes across everything. Open price, close price. On a green candle, open price, close price. Why do I say close? Because it closed higher than it opened. Highest price that price action got within that time frame, whether it be 5 minutes, 10 minutes, 1 day, lowest price that the price action got to within that time frame. Okay, so these are candlesticks. This is a good site here. I'm on the Investopedia candlestick charting. What is it? So if you want to check that out, just basically type in candlestick charts trading. That will give you some good insight here. And bear with me as I turn my phone off. Just realized it was still on. All right, another thing I want to go over quick is all this stuff's new to me, like this whole platform. I still have cameras coming today. I'm using my laptop camera right now, which is horrible in my opinion. I got 2 cameras coming today. I got a microphone here. If you can't hear me for any reason, let me know, because I'm still playing out with all these settings. What's going to be behind me in some due time is not going to be that. Lighting's on the way. So this is only going to get better as time goes on. Okay, so now that we went over candlesticks, right? Let's go to a chart. All right, so right now you're looking at the 15-minute chart for NQ, which is the futures mini NASDAQ that I trade. I find that this has the most volatility and price action, which basically means it's going to move. And you want a stock, you want an option, you want a commodity, anything that you're trading, you want it to be moving. You don't want something that's stagnant. You want basically volatility. So we're looking at a 15-minute time frame, right? So let's just take it from this morning. We're going to do a replay mode. We're basically going to go back here to 9:30. This is when market opened. Okay, so this is what you're looking at. And what we're using here is a Trading View charts. All right, as I said, I do have a subscription to Trading View. I do have some offers for you if you're interested in getting on Trading View. I will have those posted. Will save you some money. And so let's look at this. As I said, this is 9:15. We're going to play this forward by 1 candlestick at a time. You'll notice at 9:15, the candlestick, let me zoom in here for you. Let me scroll this up. All right, this is good. So at 9:15, the candlestick basically closed at 15,481. Let me go forward one. What you will notice here, see how that went down and up? Okay, so it closed here. It opened here. It got as high as here, which was 15,508. It got as low as here, 15,451, and it closed right here. So that's why this is a red candle, because it opened here and closed here. Let's go forward again. Same thing. Now this right here is a very unique candle. This is known as a doji candle. This candle basically means that there is a lot of uncertainty in the markets, okay? When you have big body candles like this, it leads to more certainty. This leads to uncertainty. It doesn't really know which way the markets want to go for this day. And as I said, this is right at open. So again, what that means, now you'll notice it's still a little green. That means that it closed just a little bit higher than it opened. So let me see if I can zoom in here to try to give you a little bit better insight. That's a long candle. So basically, it opened right about here. I don't know how well you can see that. It got as low as here. It got as high as here. And it closed right where that green bar is at. Let's see what happens. Now, what you'll also notice is that, see these wicks? All right, they're making lower lows. So that was a wick right there. That was right there. Let's see what happens next. Okay, so basically we had a green candle. That means that it closed higher than it opened. It opened right here. It got as low as here. Keep in mind, still a lower low. Notice that, lower low. And you're also having lower highs. Even though it's a green candle, it doesn't necessarily mean buy, 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 buy. You have lower highs, higher lows, okay? So it opened here, got as low as here, got as high as here, closed right here. So this next candle will form right here. And as I said, haven't been paying attention really to the markets. I only got in a couple of trades today and was profitable, so I got out real quick. But it's going to open right here, and whether it's going to go down here or up here, at this point in time, we don't know. As I said, this is a 15-minute chart. Now I'm going to show you a 5-minute chart to show you how it looks a little bit different. So a 5-minute chart or a 15-minute chart consists of three 5-minute intervals. So you're going to have more candles, right? You understand that? Oh, 1 minute, you're going to have 15 candlesticks versus, and then, if you go to an hour, you'll have four 15 minutes in an hour. So all these time frames are going to look different. They're all going to have the same general concept, whether it's opening lower and closing higher or opening higher and closing lower. If it's opening higher and closing lower, then we're most likely in a downtrend. If it's opening lower and closing higher, then most likely we're in an uptrend, particularly on the larger time frames. But you can have, and I'll show you the 1 minute, the 1 minute candles, you're going to have basically, they're broken down. Every 1 minute is what you're looking at a new candlestick, right? So you could have basically ups, downs, ups, downs, ups, downs, up, downs. And what that whole 1 minute is going to consist of is the price action between, let's just take this for example, 15,442 and 15,491. So what's that? 50 points. So you're going to see in that 15 minutes on the 1 minute chart, you're going to see 15 bars going up and down, with price action going basically 50 points. So as a newbie, it can kind of look a little bit deceiving, right? Because you're looking at a 15-minute chart and you're like, oh, that's pretty simple to understand. Then you go to the 1 minute chart and it looks completely different. And then you go to the 1 hour chart and it looks completely different. And you go to the 4 hour chart and it looks different. And you go to the 1 day chart, it looks different. Okay, so you got to understand this. I said this is for newbies who are just brand new into this and really have no understanding of price action, candlesticks, anything. Okay, this is the basic fundamentals of trading. You have to learn this. You don't need to know every single candlestick pattern chart, okay, because there's tons of them, and I'll show you that in a second as well. But you have to have a general understanding of price action and how it works. So let's go on to the next one. So as I said, right here at this line, we are closing, so we're going to open our next candle. Once again, you'll notice that we have 2 green candles in a row. That means that the price has closed higher than it has opened. Okay, so we go there. All right, we're starting to see a little bit of a change of direction now. Here's what you'll notice. You had lower lows up to here. You had lower highs up to here. Now this 15-minute candle reversed, right? And so it opened here. It got down to as low as here. It got as high as up here. And then it closed right here. Now I will tell you that the first 15 to 20 minutes or 15 to 30 minutes of the market open is the most volatile time frame. Like, see these wicks on these candles? That just basically means that their buyers got up to here and then basically sellers stepped in and brought it back down. Buyers got up to here and sellers stepped in and brought it back down. Down here it means basically buyers stepped in and brought it back up. Okay, so these wicks, when you see wicks on the bottom side of candles, that means that most likely long wicks on the bottom side of candles, most likely buyers are in control or buyers are trying to gain control. When you see longer wicks on the top side of candles, that means that sellers are in control, kind of. Okay, let's go to the next candle. Okay, you're starting to notice that, see, there isn't, like this right here, this didn't have a wick on the top and bottom. Well, it had a little wick. Okay, but for the first, since 9:30, all of these candles had wicks. So every single one of these candles is going to have a different shape and formation for the most part. Like, it's very rare that you'll see 2 exactly alike in a row. I mean, it can occur, but it's very rare. And that's why the market is so unpredictable. Let's call it that. So, as I said, after this candle, there was basically a change of kind of like structure, what was going to go on here. So you had your first lower high, or higher low, and you had a higher high. So let me just draw this out for you for a second. I just want to show you something. Let me get my little drawing tool here. Let's just go like this to help it make it easy for you. Okay, 9:30, right? So we're going to start up here. We came down to here. Then we came up to here. We go to the next candle. Let me extend this. We came up to here. See how we're doing this here? We're making basically a wave pattern. And then we're going to go to the next candle. We're going to go up to here. You notice how I said here, like, let me go back to this for a second. Here you had like a good example of what was known as like double bottoms. Price got down to this level, but sellers couldn't sell it down anymore. So when that occurred, you basically had a change of direction of the market. So starting with this candle right here at 10 o'clock, go in here at 10 o'clock, you had a lot of upward motion, right? You had constant green candles. That simply means that it was closing higher than it opened. Normally what occurs in a scenario like this, candlesticks, you always got to look left and see what occurs here. See this here? This was back on yesterday at 10 a.m. What happened there? Market got up to this point, and then it decided that it wanted to sell off. Let's see if the same occurs today. And hint, hint, I know it did because I was in a trade and I caught this top. So basically, market got up to here again today. It's again, candlestick. Lower, higher lows. See how these higher lows are? Let me just do this for you. Do that. Use that as there. You're making a higher low, and you're also making a higher high. So the easiest way to see this would basically be you have a little bit of a channel developing. Okay, so you got a channel developing from right there. Up, stay. There's your channel. So there's the bottom of your channel. There's the top of your channel. This right here is a 15-minute. This is pretty much known as a big-ass green candle. See the body on this candle? There wasn't much of a basically buyer stepping in. So this candle right here opened right here, and then buyers were in control the entire time, basically up to, let me remove this, or let me just move this drawing, up to this point right here, 15.576. Buyers were in control that entire time frame. However, what goes up must come down. You'll notice here volume on the 15-minute time frame. Basically, this means from this point in time that the volume started off here. Okay, this is another thing that you're going to have to learn is volume. So volume basically creates price. Let me just bring this indicator up here to show you. This is what's so cool about the TradingView platform. Volume plus plus plus. Now, as I said, you can have a free platform through TradingView. It doesn't have to be a paid one. The paid ones are just going to offer you more benefits. But many of these indicators are 100% free. You'll notice the volume. This is volume. This is volume. What I like about this volume, okay, so volume is the amount of buyers and sellers in that 15-minute period. What I like about this is it shows you the red versus the green. You'll also notice that volume is going down, which is very common, okay? After open is normally the most amount of volume throughout the course of the day. First, 30 to 45 minutes. And then you'll notice it goes down, all right? But this is showing you from this point in time, except for this first candle here, where it was pretty much mixed, buyers were, for the most part, in control. Now, this also shows you buyers were in control simply because if this is green, these are going to be green. This does not portray that, but it gives you a better picture of roughly how much buying and selling was going on. All right, so let's go. Let's go to the next candle, and voila, we got a green candle. You'll notice, a red candle. You'll notice it opened here, it closed here, But here's what's very important of when you're starting to get a reversal. See this wick here? They tried, but the buyers could not get it above this wick. So now this, with several other things that go on, technical analysis, indicators that you can use, the tides have turned and it looks like sellers are going to start winning the battle. I'm going to have a very good video up for you. How to think of football, right? We're around the football season. NFL starts on Thursday. College started this past weekend, well, 2 weeks ago. But I want you to think of football like you think of trading. And I will have a better, very simple to break down video with that. But just keep that in the back of your mind for now. Think of football like you would think of trading. So back to here, you'll notice now this candle, see this candle right here? Once again, like I said, this is going to be red. This is just a normal volume profile. But this portrays that, whoa, there was a lot more sellers than there were buyers. I said this is a 15-minute time frame, so this is a big time frame. And what occurred from that point in time? Now, keep in mind this trend channel, right? So we were in this channel. We're still not below that channel, nor do I know if we're going to get there because I said I basically took this trade, closed everything up, and then came back here for you. This was just a quick scout. I wasn't trying to be in something all day. Okay, well, we broke that channel. Now, opened here. Buyers tried to step in and bring it up. They didn't. Came back down. Sellers tried to basically sell it down further. They couldn't. It closed right here. Notice down here, you have higher volume. Why do you have higher volume? Because people are realizing, oh, there was a reversal. Now, it wasn't much higher volume, but there's a reversal. I'm going to start short selling. And then also basically people who had bought down here that were thinking this was going to go higher and higher and higher got to maybe this point and they set their stop losses. So they may have had 100 shares and basically they set their stop losses here. So once price dropped below that, basically they were selling. They hit their stop losses. Okay. And then we're going to go a little bit further. Okay, so once again, we have a green candle. That green candle signifies that it closed higher than it opened. So we are in an area now where we broke this channel, basically closed right below the channel. We opened here, got down to here, got as high as the top of this channel. What you'll notice is as you pay attention to trading over time, this is why I say we trade lines and levels. Do you kind of notice how this price action is respecting these lines that I had drawn? And they weren't even to perfection. Like I didn't draw them, like they weren't exactly on the wicks. But if like price action respects lines and levels. Now, I'm going to show you one other thing that, let me just bring this back here so it looks a little bit better for you. People watching my videos, I don't want any trolls out there going, oh, this guy doesn't know how to do anything. All right, so next candle. Okay, so basically what occurred, we opened here and closed here. So that means that we basically had a run up, or buyers were in control for this. What's this? Let's say from 10 o'clock to 11 o'clock. So buyers were in control for 1 hour. It's very visible on the charts. It's very visible on the volume. Sellers were in control for a half hour. Very visible on the charts. Very visible on the volume. Okay? And then what occurred next was buyer stepped back in. So we're going to go to the next time frame. Got this time frame. Once again, we had right here something just, I think I hit the wrong things on my charts. Let me go to replay again. Where were we at? I want to make sure you see this. Okay, so replay. So once again, so there was the end of the sell-off that we just went over. Then the buyer stepped back in. Buyer stepped back in. And then what occurred from this point in time? We had another, what's that called? That's called a doji candle. Remember there was a doji candle back here? Uncertainty. Now this doji candle had a little bit of red on it, which basically means that it opened lower, or it closed lower than it opened. But still a lot of uncertainty in this candle right here. So basically what I mean by that is that sellers stepped in, then buyers tried to basically take over control again. We got up to this point, which also just happens to be the top of this line that was drawn from earlier. We got up to this point, and then we don't really know what's going to go on. So what do you do here at this point in time? You can look here. You have an equal amount, roughly an equal amount of buyers and sellers. And notice here, buyers are in control. Buyers are in control. Buyers and sellers, equal amount, which equates to this candle. So let's go forward again. Okay, so buyers are stepping back in. Opened here, closed here, got as low as here, got as high as here on this wick. Next candle. And we're pretty much back to where we were at, right? So this is current now. Now what I want to do is I want to go and show you the difference between the 5 and the 15-minute charts. Do you see the 5-minute charts and how much, even though they're still portraying an uptrend and a downtrend, you'll remember, let's go back to the 15-minute. In the 15-minute chart, all you see is up, 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 finally until we get to the top of this channel here. And then you see down, 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 and then you see up, 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 and then you're starting to see another down, down, down. Now when you go to the 5-minute chart, from 9:30, which is right here, you're starting to see a lot of uncertainty. Which way does the market want to go, right? And then all of a sudden it goes down, and then it goes up, and then it goes down, and then it goes up, and then it could go down, and then it could go up. So then you hit the top of your sell-off here, and then you'll notice the sell-off pretty much is straight down. And then you're going to have what's known as basically ranging markets, uncertainty with slow grinds up. Now keep in mind, the 15-minute chart that I showed you prior is 3 of these bars, or 3 of these candlesticks. So 1, 2, 3, 15 minutes. 1, 2, 3, 15 minutes. 1, 2, 3, 15 minutes. I'm sure you get the point. But it looks a little bit different on the 5-minute charts. Now let's go to the 1-minute charts. You're going to notice that this looks even much more different. So what I trade off of primarily is what's known as a tick chart, okay? A little bit different than a time chart. So with the time chart, you're having a standard fixed time, whether it be 30 seconds, 1 minute, 2 minutes, 3 minutes, 5 minutes, 15 minutes, you get the point, right? But let's just use this 1 minute, for example. With the tick chart, there is no time involved. What you're watching on a tick chart, and I'm going to show you that in a second, what you're watching on a tick chart is the amount of basically contracts that are purchased, whether it be bought and or sold. It doesn't matter whether it's in 30 seconds, 5 seconds, 2 minutes, 5 minutes. I use what's known as the 1,000 tick chart, and I also use these charts over here that I'm looking at on my left-hand side to further basically give me confirmation. But the tick charts are basically 1,000 tick is 1,000 orders. I watch 1,000 orders, and then a new bar forms. 1,000 orders, new bar forms. I'm going to show you that in a second, so just bear with me. But what you're going to notice on this 1 minute, we're looking at the 1 minute. We're going to go again to 9:30. You're going to notice 9:35. So we have uncertainty, 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 uncertainty. Finally, we hit this lower thing, and then we go up. But within that up, there are also downs. That's because as buyers are basically trying to stay in charge, sellers are also trying to stay in charge. Remember when I said think of trading like football? Okay. So buyers are trying to be in charge the entire time right here. Sellers step in. Sellers can't go any further. They turn over on downs. Buyers step back in. Can't score a touchdown. Turn over on downs. Sellers step back in. And then, right, basically, they're playing between the 20-yard line and the 20-yard line here. And then next thing you know, buyers catch a break, have a nice kickoff return. You know, like just think of trading like football. And I'm going to show you something else, which is known as the relative strength index, which basically just shows the strength of the markets. But we're going to take baby steps here. I'm going to try to keep each one of these under 40 minutes. So we're at 30 minutes right now. So that way you can watch them and analyze. But you'll notice, as I said, this 1 minute chart looks completely different than this 15-minute chart. This is the 15-minute chart from today. 9:30, right here. Looks pretty different, right? Let me just extend this line here. Just want to do this for a second. And then I want to go like this. And then we're going to go back to the 1 minute chart for a second. And then we're going to zoom out. You'll basically notice that it's still respecting this line. Now, what is likely going to occur, and I'm not going to get in any trades right now, but I'm just going to tell you what is likely going to occur. So basically, buyers were in charge, sellers stepped in, buyers tried to regain control and realized that they couldn't get it up to the previous highs. So now, if price breaks below and holds below this line on, say, the 5 and the 15-minute chart, it is very likely that you will see price go down to, let's see, at the minimal, this level, 1504. This next level, 15477, or possibly this level, 15444. Now, what I said has to happen is it has to break through this line, and then you're going to have a couple candle closes. Not on the 1 minute, but you're going to have to see it on the 5 minute. But you'll also notice that this line right here is going to be an area of resistance, right? The resistance and support. So it's going to break, can't break through here. If it breaks through here, basically, then it might become an area of support where then it can't break through on the other side. Okay? But that's the general basics of candlesticks. Let me just go over here, get back into this, show you again. You're always going to want to be using candlesticks. Hold on. Let me go back. Let me show you why. Now, when you pull up your apps on your phone, it just looks like, oh, this is what investing is. That's what like a line chart is, right? You can't tell what price action is in that. You cannot use that for trading, okay, for day trading. So you always want to be using candles, and you don't want to use Helinki Ashy candles. You don't want to use those yet because those take an average. So you always want to be using candles. Hollow candles is the same thing. Whatever your preference is, but you want to be using candles in order to start off with. So now let me go to my, where are we at here? Get off of this. I want to go to what the tick. I want to show you the tick chart, right? So we have third displays. Let me go ahead and voila. Look at that. I'm getting good at this. All right, let me zoom in. So as I said, these are still candles. Let me zoom out a little bit. This chart's going to look confusing. There's lines, stuff like that everywhere for you people that don't know. I'm sorry, okay? It's the only way I can show you this. But these are the 1,000 tick chart. Up here, you'll notice I have 1,000 ticks, 1 minute, which is 1M, 5M, 5 minute, 15 minute. Okay, so those are the charts that I have up. But see this countdown right here, 668? So I said this is 1,000 tick chart. So you're going to get a new bar, not necessarily, so you're going to get a new bar form once this hits 0. Okay, I also use on this, now this is through the Trade of 8 platform. Okay, I have this through my Apex funded account. All right, now you can also get a Trade of 8, I believe, simulation account for free. I think it's 14 days free, but there's a lot of other accounts that you can get for simulation as well. If you're just looking for simulation, which simulation means is trading with fake money, okay, until you get good at this, in which I don't recommend you rely on that. But if you're a complete newbie, a complete virgin to trading, yes, 100% go that route so that you're not losing or wasting any money, okay? You could try Webull. You could probably try Robinhood. You could probably try TD Ameritrade. But I will. I'll look into it and see if Trade of 8 allows you to go for longer. But these are tick charts. Okay, so notice up here we still have 100. All right, we're down to 0. New bar formed. Now, sometimes when volume is high, you'll be having a new bar form like every 15 seconds, if not sooner. So it's giving me a good idea a lot quicker what's going on with the market. And what I'm doing is I'm basically sitting here saying, okay, if price breaks above that level right there, if price breaks above that level, it's most likely going to go up to, at the very least, probably this level and this level. But it has to break above that level with strength. Now, how do I know whether there's strength breaking above that level? See my volume here? This is volume. You're going to notice a lot of reds right here. And you're also going to notice a lot of red candles. Because I have what's up on this chart, what's basically known as the, what is it called? Wait for a second. Indicator. I use the Tiki. It's a Tiki scalper tool. Okay. Are they always right? No. Is any indicator always right? No. Should you rely on indicators alone to trade? No. A lot of people do. You'll get lucky. A lot of buy-sell signals come in. You'll get lucky, but you're going to have that one time where you end up getting screwed. You have to learn this. I have several indicators on my chart, okay? But you have to learn this. Here's a perfect example, okay? If you're using this and using this blindly only, and you say, oh, okay, red candles, red candles, red candles, well, I'm just going to buy right here, right? So you get in on this candle right here. You're going to sell, right? You're going to short the market. Why? Because you got red candles. Well, guess what? You short the market there. You're at 1529. You're at 1541. That's 11 points. Depending on how many contracts you're in, you just lost anywhere from 500 to 5,000, maybe $100,000, depending on how many contracts you have, right? So you can't go into this blindly. You got to know what's going on. But these are the tick charts. I just wanted to show them to you. This is a different story for a different day. I want you to start first with the candlestick charts, okay? We got to start there. We got to take baby steps in order to be able to walk. All right, guys. This is Steve again with the Breakout Project. And I must say that we all have 24 hours. Use wisely. Take care now.